how the markets are looking like as we speak. But one multi-bagger of 2023 that is in focus is Jai Balaji Industries. Now, this steel and allied products maker has surged over, has seen smart moves almost 13 times is the kind of gains and a 9.6 times in the past 6 months. Everyone's wondering what is that story with Jai Balaji Industries and why has this stock seen this kind of a rise in terms of stock price performance? If you see from a steel production volume, that has grown by almost 11% on a year-on-year basis as well. To discuss this and more, joining us on the show is Aditya Jajodia, I beg your pardon, Chairman and MD at Jai Balaji Industries. Aditya, hi. Good morning and welcome to the show.
Thank you, ma'am. Good morning to you also.
Always a pleasure to speak to you. Always it's a pleasure to speak to you as well. Aditya, my first question coming to you is, the first question that all of us have been asking is, what is this turnaround that we are looking out for? Because clearly the company was under NCLT, had turned into NPA. The history is there. Yeah. Where has the turnaround started and what is it?
Madam, the turnaround started post the financial restructuring which happened with the banks and with the ARCs. Actually, we were on NPA, but because of the past very good ethical conduct with all the stakeholders, we got a lot of support from all the stakeholders, including the bankers, the creditors, the buyers, the suppliers, all the team members, etc. So with the effort of all the stakeholders, we were able to script a turnaround. The turnaround started from the year 2019-20 basically. The operations had dipped practically, our turnover in the year 2016-17 had dipped to a low of 1300 crores. Today it is in the excess of 6,200 crores and we are looking at further surge in the turnover also in the forthcoming years. Also the profitability has improved very drastically and in the last two quarters we have done an EBITDA of more than 450 crores.
Right. So overall, Aditya, clearly, you know, with the turnaround, you have majority of it that has been refinanced. Last tranche, which was refinanced by Tata Capital, is that the only debt on the books now?
Absolutely, madam. The only debt on the books now is the Tata Capital debt, and the figure is around 560 crores to be precise.
And what's the repayment schedule on that one?
Madam, the repayment schedule is around 3 years, but we are looking at earlier repayment also with अभी जो अर्निंग्स और जो बीटा है तो उससे अर्ली रिपेमेंट में कोई दिक्कत नहीं होनी चाहिए.
राइट. तो अर्ली रिपेमेंट भी हो सकती है. ओके. तो ये अर्ली रिपेमेंट के हिसाब से आपका जो क्लियरली कैश ऑन बुक्स है वो मैच कैसे हो रहा है?
एब्सोल्युटली मैच कर रहे हैं. देखिए मैडम, व्हाट इज हैपनिंग इज दैट द ईबिटा फॉर द लास्ट 2 quarters, as I said, it was around 450 crores. Going forward with the current expansion plan in place and the cost cutting measures in place, particularly with the focus being more on value added products and margin expansion, so the cash flows are going to improve. So but even with the current cash flows and with the current Capex plan which we have, so basically the debt today on the books, it is equivalent to maybe 2 quarters of EBITDA only. So I don't foresee any trouble in handling that.
Okay. आपने भी, you know, you mentioned about increasing Capex. कितना Capex है? And with that Capex, which are the capacities you're increasing between the various segments?
Madam, the Capex plan, it is for a total of around 1,000 crores. Out of which around 350-400 crores has already been spent from internal accruals entirely. There is no debt taken for the Capex. And out of the balance 550 crores, this is to be completed over the next 12 to 15 months. So with the completion in the Capex program, what is happening, the Capex program is on 2 fronts. One is on some cost cutting measures which are drastic, and the second is on adding capacities in value added products like ductile iron pipes and specialty ferroalloys, and also adding some hot metal capacity.
Okay, and how much capacity addition you're expecting?
Capacity addition, we're expecting that in ductile iron pipes, our capacity today it is around 2.5 to 3 lakh tons. We are raising it to around 6.5 lakh tons. And in specialty ferroalloys from 30,000 to 72,000 tons. Hot metal capacity from around 0.5 million tons to 0.86 million tons. We are also raising some power capacity, etc. and some central capacity.
Okay, and currently what's the capacity utilization at the plants?
Capacity utilization in the plants is around 80 to 85%.
Okay, and at peak utilization, when do these capacities come on stream, the new additions that you're doing?
The new additions, the financial benefits will start to accrue from each and every quarter. So most of the things are now in place. So as and when the modules will get commissioned, so the benefits will be they will be visible from every quarter from here onwards. And the entire impact of this entire exercise, this will be available in the financial year 26.
Okay, and at peak revenue, at peak capacity utilization, when everything is being utilized, what's the peak revenue you're targeting?
The peak revenue, assuming the prices which are prevailing today, the revenue should be in the region of anywhere between 9,000 to around 10,000 crores.
Okay, and between ductile as well as ferroalloy, what is the breakup in terms of segments? How much, which segment contributes higher to revenues, and where is the margin richer?
But I will explain to you. Means we are basically into 5 product baskets. One is ductile iron pipes. One is specialty ferroalloys. The third is TMT bars, long products. The fourth is pig iron and sponge iron. Amongst these, the value-added products are specialty ferroalloys and ductile iron pipes. So these were constituting around 30-35% of the revenue around 2 to 3 years ago. But as of now, it is around 60%. Going forward, after 18 months, it is going to be around 75-80% of the revenues.
Okay, and with this, because ductile is one of the value-added products, right? By how much will your margins improve? Because currently you're at in that 14 to 15% kind of a range.
Madam, with the cost-cutting measures and with the value addition expenses, the margins should exceed 20%.
Okay, and what's the breakup between government clients versus private customers, and do you see that mix changing?
Madam, the mix will probably remain the same. The mix is around 50-50 for government and the private customers. Ultimately, the buyers are mostly the government, but they are the EPC contractors, very reputed contractors, so they are the major buyers.
Okay, and does the margin profile differ between the two?
No, madam, not much.
Not much?
No, not much at all.
Okay, and from a raw material price perspective, if you see coking coal prices, from the 1st of July, they are up almost 41-42%. How is that impacting the margins, and what's the trend you're expecting going ahead?
See, coking coal has always been a challenge for Indian steel manufacturers. But because of this being the perennial challenge, the Indian steel manufacturers have always devised ways and means to, I will say, to navigate and to circumvent this. So in ductile iron pipes, where we are hedged is that in ductile iron pipes, by and large, most of the contracts are held as per the basis of a WPI index, where if the prices of steel go up or if the prices of coal goes up, so they are more or less linked very much to that. So it is more or less a place where the margins are very well covered.
Okay, and how difficult is it, taking into consideration the kind of cheaper steel that gets imported into the country from China, Korea, Vietnam, because that has been one of the concerning areas for the industry as well, right?
Absolutely.
So how do you combat that?
Madam, when we talk at the macro level for the industry, mostly the dumping happens in the HR space, which we do not manufacture. HR is made by the larger steel producers and the main steel producers. We do not manufacture these products. Our products basically, which is the ductile iron pipe, it is a very voluminous product. So because it is voluminous, so the transportation cost from countries like China, it is very, very high. So the chances of getting it imported into India, they are very, very remote.
Okay, and between the product mix as well, if you have to see what is happening from the top line perspective, you said at peak revenues you're expected to see 9 to 10,000 odd crores, right? If I'm seeing historical data, the top line growth is slightly lower as compared to the way profitability is improving, the way margins are improving. So is it the change in product mix that is leading to this, and or does the gamut change?
No, madam, you hit the nail on the head. It is entirely because of the change in product mix. I will again repeat, when the company was facing distress, and I will be extremely candid, acute distress. At that point of time, what was happening is that because of cash flow problems, we were selling more of intermediary products like pig iron and sponge iron, where the margins were not very high. As and when the company's financials started to improve, our focus automatically changed to make more value-added products, where the margin profile started to change drastically.
Right, and from an investment perspective, are you talking to any external investors, say from the domestic industry or the FI side, mutual fund industry, where you think investors could come in, which could give confidence as well? Because clearly when you see turnarounds like this happening, for investors to get confidence also becomes very difficult.
I understand, madam, absolutely. But madam, again, I'll be very candid with you. This is my first TV interview after 10 years of lot of pain. So that exercise will all start automatically. This is one of the first exercises which has already started. We will be very keen to share our story with all our investors, with the existing investors and with potential आने वाले भी जो इन्वेस्टर रहेंगे सबसे शेयर करना ही है. बट ये क्या है कि एक्सरसाइज ये का स्टार्ट आज ये आपके साथ ही पहला स्टार्ट हुआ है.
और one more thing that we noticed from a shareholding pattern is that a lot of promoters who are holding, individually in terms of the stock, right? So any reason why there are so many, family promoters or anything that are holding the stock?
No, madam, because the family, it is a joint family, madam. So all the individuals are holding the stock accordingly.
Okay. Now, from here on, what's the next milestone that the company wants to achieve?
Madam, there will be many milestones. The first milestone obviously was to come out of this entire, I will say, distress. That is over by God's grace. Entirely over. That is why I am here today with you. 6 महीना पहले इसीलिए नहीं है आपके पास मैडम. Number 1. Number 2 would be is that we would like to complete our entire Capex program. One thing again I would इसमें main point जो रहेगा कि entire Capex program it is being funded entirely from internal accruals. So the next milestone will be is that the company moves towards being debt free, net debt free I mean to say, and also expanding the margins and to take the profitability, and the company will be very focused on ROC, ROI and also on the margin expansion. In fact, we will not be chasing the top line. Top line will increase automatically. But our focus will be more on the bottom line. Okay.
Right. So I think a lot of things that we will be watching out for as well. Thank you, Aditya, so much for joining us on the show and sharing the views. So clearly a turnaround story that we have been watching out for. That's with Jai Balaji Industries. From the way the growth has been, the restructuring that has happened as well, Capex plans, 1,000 odd crores is what the company is investing. And by 26 is where you will see full benefits that will come in as well. In fact, today, if you see the stock as well, almost at upper circuit. If you can just have an intraday chart in terms of today's session, there you go, 5% up move in today's session, but clearly a multi-bagger in terms of 2023 is what we've seen.